Good morning, all. Well, we've got NFP out of the way. We went through earlier on trading that on the indexes overnight. Very active night as far as earnings go still, and Thursdays you also get a lot of secondaries and a lot of reports, usually out of mergers and acquisitions. Some biotechs, but most of those seem to come out Tuesday and Wednesday. Okay, we're going to go through some of the big gapping ups tonight with myself and Alex that we're looking at. Marvel was the big one. We are up 21%. What did you see there, Alex?
Marvel seems to be a beneficiary of the continued outsized spend in semiconductors. This is a company that's well positioned, although I think it's had a pretty good run, especially after this recent markup. But I like the semiconductor space. I like Marvel. I like Xilinx, AMD, Broadcom, Qualcomm. Like, this whole space is hot. Everything runs on chips, and that's set to continue. So longer term, I think Marvel is a strong contender for anyone's portfolio that's potentially looking for a safer play that still is in the tech sector and allows you to get some exposure to that fourth industrial revolution that's playing out.
Thanks, Alex. Yeah, we saw, I think it was earlier this week, that Taiwan Semi, which is basically the foundry of the world, saying they're going to have a record production this year, upcoming, and next year. So companies like Marvel and and Xilinx, I think were some of the ones you mentioned, actually are ahead of the curve. They're not the supply crunch has been back from January this year as far as this space goes. Our belief, I think, is pretty much that a lot of people are using this as an excuse now. And you can see that with companies like Marvel that are just motoring along. Okay, another two overnight were SMAR up 16%, TLYS up 9.8%. I got to be honest, I don't know much about these companies, being more a futures and commodities guy. What do you know about them, Alex?
Tilly's looks like it's an apparel company. Looks like they delivered pretty strong results, and they're probably, and I'm speculating a little bit here, but they're probably a beneficiary of some of this holiday spending and normalization spending as people refresh their wardrobes. So I would think that that's part of it. They probably also have some pretty good execution. Smartsheet, this is as the name suggests, it's a tech company. It's a cloud-based platform for executing work and enabling teams to plan and organize. So it seems like it's kind of a competitor with some of these other collaborative platforms. Certainly in the post-COVID world, there's somewhat muted demand for this compared to where there was before in terms of the growth rate. But one thing that we can say for sure, remote work and cloud collaboration is here to stay, and Smartsheet seems to be a beneficiary of that trend.
Thanks for that. And looking at a few more here, just two more. We have the list in our room of the whole lot, but ZG or ZG, depending where you're from, is up 9.4%, and HIB, which is Hibbett Sports from memory, which is a small sports retailer that competes with Academy and Dick's, they were up 6.9%. Anything there?
Got to say, yeah, I think it's pretty interesting that Zillow's catching a bid here. So what we have going on is a classic playbook. We've seen it before. This is a company that has had some struggles. So, recall back to Zillow's abrupt exit, I might add, from their iBuying program, which was blamed on their algorithm, being defunct. The same algorithm, I might add, that sets the Zestimate. So, if that Zestimate doesn't work and their iBuying doesn't work, then does the platform work at all? A question many investors struggled with as the stock plummeted lower and lower. This morning, we got news that Zillow is selling homes it bought under that failed iBuying program, while simultaneously repurchasing up to 750 million shares, which has the effect of reducing the float, which in turn helps to improve the optics of the company's multiples. So this is a classic ploy. I'm not saying that it's not going to potentially work out for investors, but you got to ask yourself, if this company has so much liability in these homes they still have to sell, and they don't necessarily have a plan after iBuying was supposed to be their future, they're now back to a legacy advertising platform. Zillow investors probably need to ask themselves, what is the long-term vision? And if you can't articulate one, I mean, it might be time to look at the exit doors potentially. If you really believe in the management and the longer term idea that this company can turn around, maybe this is a decent sign that the bottom is in. But to me, I'm very skeptical of Zillow. I'm very skeptical of their legacy business, and I don't think the management has the vision to ignite the next iteration of this company's future.
Thanks, and good points. Actually, when you talk about the algorithm that went awry, it reminds me a lot of the algorithms that we fight every day on, or fight or enjoy. Once you work out the algorithms, they do a lot of what we do in trading. But a good example there, and I think from what we saw when they released that about the housing market, the ones they've bought that they're trying to flog or sell are in the bad, for one of a better word, areas. Remember, the key to properties, I think our mums and dads all taught us this, is location, location, location. So there could
Yes.
be quite a bit of a loss there. Not sure, but it probably will hamper those markets all of a sudden, all that becoming available. And you know what? In the bigger picture, the housing market, part of its problem is it's got away from people being able to afford it, to be affordable. I think we've mentioned before, we think it's pretty unfair on the average man that all these private equity firms, banks got off from 2008 and are able to buy all these properties away from homeowners and making it a fake market. Oh, that sounds like we've heard
It,
that
it,
before.
and it is, though.
Sorry, mate.
I just wanted to add on that it kind of has become that, though, because on the one hand you've got a program that is starting to moderate, but there is the enormous buying of mortgage-backed securities that artificially cheapen mortgage rates and incentivize people to buy homes. Then you had COVID, itself, which really encouraged people to move away from cities and into suburbs and rural areas, as well as expand and build out their homes. So there's this big rush. And I think a lot of the time, it can be described like we see in the markets. There's this sort of FOMO. There's this fear of missing out. Oh no, if I don't buy my home now, I'm going to miss out on this housing market explosion. And it became the self-fulfilling prophecy because everyone got a sense of the FOMOs about buying a home. And so we had this mad dash. And this was happening as COVID-related supply constraints were hitting the supplies that were being used to build homes like lumber, making them more expensive, which further pushed housing prices up. So you had a demand story, you had a supply story, you had the Fed kind of putting their finger on the scale a little bit. And that's why, in some senses, the housing market has become really inequitable. If you're a first-time buyer, if you're a Gen Z or millennial, it's really hard to get into this market and get anything and not be afraid also that you're going to be upside down in your equity in the next couple of years.
Yeah, 100%. Just before we move on to what's gapping down, I'm looking at the market, and as you can see in the window there, they're the main markets we look at in time frames to overview. Obviously, there's a couple equities there. We tend to watch them on a different platform, but you can see the S&P index there, the Nasdaq index, the Russell, natural gas and oil being two of the main things we trade. Bitcoin, because a few of the guys in the room love trading it. I'm still caught in 1985, I think, on that one. But we watch that for sentiment. But I'm not watching on the high day. One of the big things we saw yesterday was the Chinese stocks getting hammered. We also had a bearish position on natural gas, so they're working out nicely. I'm seeing a lot of Chinese names go by. XPEV being one, Baba, Billy, all hitting new lows here. If natural gas, as far as ETFs go, cold and bold, the two big ones there, cold and boiled. Did I just say cold and bold? So you're watching them, but we saw it fall down. Remember, natural gas is Friday. If you trade that, most of us have been around. You're taking a bet on the weather over the weekend, so there's the customary gap up and gap down. Okay, let's move on to who's gapping down.